Okay, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to do a TLT and market update. There's a lot of things that I want to cover. We're going to jump straight into it. All right, so make sure to smash the like button, subscribe to the channel if you guys are new. Stay tuned to the end because there's going to be so much data and different charts that we're going to go over in here. I don't want you guys to miss anything. There's really, some precious gems being dropped in here. Now, we're going to start off here by this article saying that Americans will dump up to $1.1 trillion in stocks this year and move the cash to credit and money market funds, says Goldman. Now, that's a pretty big headline claim right there. And sometimes you have to read through, the headlines, right? We know that the media is often, funded by these really big hedge funds, by these really big corporations. So, don't always take everything just by a glance and try to dive a little bit deeper. This is the same company, Goldman Sachs, that was just giving positive reviews on some of the banks right before they collapsed. So, just keep some of that stuff in mind. Now, one of the reasons that I'm going to show you guys this next chart, which is the core sticky inflation versus the Fed fund rate, is because everyone seems to have forgotten about inflation after the bank crisis. We barely had inflation starting to cool off. It didn't even really come down much. It was really just cooling off and not becoming, so raging. But the Fed has printed $300 billion and added $300 billion to their balance sheet in just a quick amount of time. And that's I think that inflation could come back raging, that there's a really big possibility, especially over the next 6 months to a year, and especially if we start to pause and cut rates. Now, none of this video is financial advice. I'm not an expert on any of these things. This is simply just a free video on YouTube, and I'm giving you guys some data to back up some of my thoughts. Now, again, we have the core sticky inflation versus the Fed fund rate here. Core sticky inflation is here in blue, and look at the core sticky inflation, guys. It hasn't even started to come down at all. All it's doing is just consolidating. It's just staying flat right here. And we have the Fed funds right here in red. And the reason that I'm showing you guys this is because typically you start to see the core sticky inflation start to go down once the Fed fund rate is up above the core sticky inflation. As noted over here, we see the red line above the blue line, and then we start to see that drop in the core sticky inflation. Same thing over here. Fed fund rate is above core sticky inflation, and then we start to see a decline in it. Same thing over here. It's above, and then we start to see a decline in the blue line, right? And this has happened multiple times in history. And so, one of my fears is that if we pause or start cutting, that inflation, is kind of being washed out by the whole bank crisis right now, and that inflation will come back raging and really bite everybody. And a lot of people may not be prepared for it. So that's why I have this chart right here. I think it's a really good one to pay attention to. Now, speaking of TLT in the bond market, we have this article here posted on NASDAQ.com. Bonds are a safe haven again. Is there still time to buy? And it's a really interesting point. Now, the whole reason I started making TLT videos is because it's been a leading indicator, and the bond market is just historically attractive right now compared to the 0% rates that we've been getting. Right now, one thing that I want to highlight is that this is not a normal economy. In a traditional economy, stocks and bonds move in opposite directions. For those that aren't familiar, let me explain. When the economy is strong, stocks are more attractive and bonds are less attractive. That in turn causes bond yields to rise as bond prices fall. So that's the correlation, right? As the yield goes up, the prices of bonds fall. And so the opposite is true when the economy is weak. Stocks tend to be seen as carrying more risk and bonds less risk. This causes bond yields to fall as demand for bonds rise along with the bond prices. So for instance, if the yield on the 20+ year treasuries, if the yields start to fall, the demand for bonds and the prices are going to go up. So I did a whole video showing you guys basically how TLT performed according to the Fed fund rate when the Fed fund rate goes up, how it performs, and how it performs when the Fed fund rate goes down. It's a really interesting video. But we're going to go ahead and just keep going on. So, but that's in a normal economy, right? The way that works. The US has been anything but a normal economy since the last financial crisis, if not before. And the reason for that is the variable that is the issue now, interest rates. Since the bank bailout of 2008, bond yields have stayed depressed as interest rates stayed at very low rates, historically speaking, when the economy was mostly strong. The 60/40 portfolio made no sense because stocks were the obvious choice for growth. When the pandemic hit, the government printed trillions of dollars to stimulate the economy. Interest rates were taken down to zero, and this allowed stocks to stay attractive and bond yields to remain depressed. But in the last 12 months, the Federal Reserve has increased interest rates from its near zero to 5%, while the government continues to inject more money into the system. This is causing the flight to bonds. It's also making other traditional safe haven assets like gold attractive again as well. And I've been covering gold. I pretty much cover everything on this channel, right? I cover the bonds, cover commodities, I cover gold, natural gas, silver, all type of stuff, and crypto as well. But yeah, so the treasury yields are actually dropping right now. And this is the 2-year treasury yields. And you can see the Fed's end 2023 policy rate forecast is over here on the right. And we have the Fed's end 2024 policy rate forecast. And, there's been a huge plummet right now in the 2-year treasury yield. And I actually made a whole video. We had one of the Tycoon Talk episodes really just highlighting this and saying that, hey, we had the 2-year treasury yield along with many other treasury yields on a technical analysis basis. We're setting up for a big move to the downside. And a lot of time price action precedes news. So when we made that video, it was before the bank started collapsing. And oftentimes, the news will come after, right? And so you can see the setups beforehand, and then the news is really just a catalyst that makes things happen. And so what we had this very long-term trend line since the beginning of 2022 that we tested multiple times on the 2-year treasury yield. We had a break and retest, very textbook, right? We broke the trend line, then we retested the trend line and pushed down. On top of that, we also had a head and shoulders forming with our left shoulder here, our head, and then this was our right shoulder at the retest of the trend line here. Okay. As well, on top of that, we had bearish divergence, which if you're not familiar, take a look how we had a high here. We had a higher high here. Okay. Then a higher high here and a higher high here, and even a higher high right here. So clearly the 2-year treasury was in an uptrend, right? No secret about it, heading up. But meanwhile, the RSI, the relative strength index, made a high, a lower high, and a lower high, and a lower high. So, it was actually losing relative strength, creating lower highs, while the, yields were actually going up and up there, making higher highs. That's a bearish divergence. So we had bearish divergence combined with a trend line break and retest, combined with the head and shoulders, ultimately for about 3 signals that the 2-year treasury was about to drop hard. And, that's going to result in some bonds going up in price, right? And so another thing that I've been paying attention to, another really good chart, has been this one right here. TLT has been a leading indicator for the stock market for, over the past year, for over a year. And so to explain that to you guys, what we have is TLT here in red, and then we have the S&P 500 futures here in blue. And anytime there's been a divergence, as highlighted by these arrows, the stock market has followed the path of TLT. And here recently we had another divergence, but let me explain these divergences. So here we have a high, right? And then a higher high. And then here we have a high, and then we have a lower high. So we can see that, the stock market's going up while TLT is going down. And ultimately the stock market ends up following the trend of TLT. And the same thing happens here again, where we're making higher highs on the stock market, and TLT is making lower highs. And then what do you see? The stock market follows. And it also works in the opposite direction. When the stock market is making lower lows, right? Low here, lower low here, and then TLT is making higher lows, you can see the stock market ends up following. And it's played out multiple times throughout the past year. And I started highlighting that we were potentially going to have a big move to the downside, towards the end of February, because TLT was actually going down while the stock market was raging. And you can see that that played out very well. And then I also pointed out that we had here recently that we had another divergence where TLT is now going up, but we see the stock market was making lower lows in the beginning of March. And if this continues to play out, then TLT is going to be a really nice leading indicator. But there's something strange going on here as of recently. Since March 6th, we've had basically a complete divergence where they're just moving in exact opposites. So what we've got here is we've got the SPX here in yellow, and we got TLT in white. And this is March 6th right here, the specific date. And you can see that they're actually trading pretty accordingly up until then, right? Kind of following each other, moving at the same. And since March 6th, right, when the S&P has gone down, TLT has gone up, and it's been in an exact divergence pretty much the entire time, right? And then here we see TLT going down, and what do we see? We see the stock market going up. And it's been really interesting to see and interesting to track this. You can see here TLT going up, meanwhile stock market going down. So really, really interesting just to see some of the divergences. And it just kind of hints that, maybe the bond market is going to how it used to go. When bonds would go up, stocks would go down. And when stocks would go down, bonds would go up. And so, after this whole bank collapse and everything happening, and everyone flocking to bonds as a safe haven, we may actually see it play out to how it has in the past, where they almost typically just diverge from each other rather than always being a leading indicator. Now, I'm paying attention to both of these, so we're going to see if TLT will continue to be a leading indicator, or if they're just going to continue their straight divergence and just be completely diverged and almost perform exact opposite of each other. But I thought that was really interesting to see. And it's something that we've been noticing in the Discord too, as I'm trading TLT in the stock market. I'm going long the stock market and then short TLT at the same time, and both of them are winning. And it was based on some technical analysis, but it was just, I've been noticing, I'm like, man, hey, well, TLT is pretty much doing the exact opposite almost of what SPX or SPY is doing almost on a daily basis. So, we may continue to see that. Now, TLT, if you look right here, we have some things on the chart. I know it looks a little bit complicated, but I'm going to break things down. The most important thing, all right, is we want to pay attention to the recent price action, and look at what we have forming here. We have a nice cup and handle forming right now. And if bonds continue to be a safe haven and investors keep flocking into them, we could see TLT come up to this $111 region and fill this gap. Now, 109.69 has been a very strong resistance level that we haven't been able to break above. We recently just got above our 106.29 area. And we're going to see if we can maintain above that area. We do have the chance of heading up to retest that 109.69 and potentially break out and hit 111. That would be a bullish case scenario if we get the cup and handle to play out. Now, if you notice, I have buy and sell signals on here. I'm going to actually break those down for you guys so you can hopefully learn something a little bit more about TA and technical analysis. And so initially, what we're going to do is we're going to take a look at the MACD. All right, we're going to take a look at our RSI, and then we're also going to combine some of the things that I have drawn here on the chart. So the first thing I want to highlight is the double top pattern that we had right here, indicated by these two arrows. So that's a bearish chart pattern setting up. Now, that's about one signal right there, okay? Then we actually had a rising wedge indicated by these two trend lines here, right? And you can see we had that rising wedge forming combined with a double top. So now that's two bearish chart patterns. And if we look here at our MACD, we actually got a MACD sell signal when this red line crossed below the blue line on TLT. This has been a good buy and sell signal on the daily time frame for a long time on MACD, right? If we look right here, we can see another sell signal right at this time period, and then we got a strong move to the downside. Over here, we see the opposite where the red line crosses above the blue line, and that's a buy signal, and we get a strong move to the upside. Over here, we got that sell signal combined with two bearish chart patterns. So now we have three things aligning together to tell us that we could get a drop on TLT. And as you can see, we broke that trend line, retested it, very textbook. Like, it doesn't get any more textbook than this. Break, retest, push lower, right? And so that was a really good sell signal over here. And then I actually bought call options on TLT when we were at this point. And the reason being is we had multiple signals, again, indicating we could see some type of bullish activity. So in this case, we had a double bottom, right, indicated by these two arrows. So that's, one setup basically. And then we had bullish divergence. So if you're not familiar with that, pay attention to these circles. We have a low here and then a lower low here. So the price of TLT is going down, but on our RSI, we have a low and then a higher low right here. So we're actually making higher lows, increasing in relative strength while the price is going down. And this right here is actually known as an abandoned baby. This is a bullish chart pattern indicated by this gap down and the way that this candle closed right here. And so we bought call options here on this day. And, you can see that we also ended up getting a MACD entry signal the next day where TLT, the red line on the MACD, crossed up above. So, we had two chart patterns, right? We had the abandoned baby, we had the double top. Okay, then our third signal right here was the bullish divergence. And then the fourth ultimately was the MACD buy signal. So if you're looking for something to start practicing, maybe in a paper trading account, when it comes to trading options, TLT is definitely something I recommend. And you can start to learn how to trade options a little bit while practicing some of these different technical indicators and chart patterns. Now, the next thing that I want to go over is the initial 5-wave structure, which was a bearish 5-wave structure that I was tracking. It seems like, we pretty much broke this structure is what I would say. All right. Now, initially, it was very textbook. We were looking for this larger 5-wave impulsive move to the downside to take TLT anywhere from about $87 to $81. And that was going to be if inflation kept coming in hot and interest rates continued to rise, right? And so wave 1, wave 3, and wave 5 are supposed to be 5-wave impulsive moves to the downside. And we kept getting that, right? We got a 1, 2, 3, 4, 5 down, 1, 2, 3, 4, 5 down. And then we started getting our 1, 2, 3, 4, 5 down, but ultimately we broke the structure. Once we got our 1, 2, all right, we really just chopped sideways. And if you take a look right here, let's draw an arrow down. Since about the middle of December up until now, TLT has straight been trading in a range, right? And it's very, this creates like good opportunities for traders, okay? Because, you're trading in a range and it gives you really good levels to try and buy and sell at. This is something that's pretty nice. And you combine it with a lot of the signals that I just went over in the last slide. It makes for some lucrative trading opportunities, right? I've been able to get 80% on TLT options, 15% in just an hour, different things like that. So, I would say that pretty much this bearish 5-wave structure has been voided out now, as we've really just been consolidating sideways. And ultimately, the bond market is trying to figure out what's going on, right? The narrative is constantly changing. Oh, we're cutting rates. Oh, wait, no, we need to actually do more rates. Oh, wait, we're cutting rates. Oh, wait, now there's a banking crisis. And you can see the bond market's really just trying to figure itself out over the past 3 or 4 months. So, I'm not afraid to admit, when some of the stuff is going on. Now, one thing that we do need to be cautious of, though, okay, is that there's 3 gaps down on TLT. We have a gap right here to about 95. We have another gap to about the $100 region. And then we have another one to 104, right? I mentioned earlier that the cup and handle right here could take us to fill the gap up to 111. But keep in mind that we have 3 gaps down to fill. These gaps, they tend to fill about 90% of the time historically. So it's definitely something you need to be cautious of and have on your radar. If we break below that 106.29 area on TLT, there is a stronger chance that we could head down towards, these gaps and potentially fill those. So keep a close eye on those. Pay attention to your MACD. Look to see if there's going to be any sell signals. Now, what we have here is XLF and the KRE. KRE is on the right side, XLF is on the left, and KRE is the regional banking ETF. I have a whole dedicated video to this, but I'm just going to go ahead and briefly cover over it. And so what I think is that XLF, the chart, could turn into the KRE chart, and we could see more pain in the financial sector, right? And so if you take a look here, it had this really, really big drop from the $65 area all the way down to about $40. And it filled this gap here that we had, this gap down back from basically 2021. So a gap from like 2 years ago. And this gap ended up filling. Now, XLF also saw a sharp drop down, but it really only went from about $36 to about $31. So a $5 drop versus, the really big dramatic drop from 65 all the way down to about 40 on KRE. And so if more banks are going to continue having a crisis and more banks are going to, face more pressures, largely probably due to commercial real estate, if not, bad treasury market investing, then we could see that this trend line break, just like the trend line broke here, and we could see XLF come down and fill the gap down, just like KRE did, because we still have a gap down on XLF from 2021 that we haven't filled in about 2 years. And remember, these gaps, they tend to fill about 90% of the time. The big question is just when are these gaps going to fill, right? And so if you're trying to short this whole time right here because you think that it's going to come down and fill this gap, you can see that, it's been years now and that gap still hasn't filled. So I like to just chart them up, set some alerts around that area, because then it helps me understand if the stock is being drawn towards that gap and if there's a potential for that gap to be filling sometime soon. Now, one of the ways that XLF could actually come down and fill that gap would be through the Wyckoff method, which is over here on the left. And if you take a look, it looks very similar currently to the early stages, to the markdown area, essentially, of the Wyckoff method, where you have the spring. We have the spring right here. Then you get the distribution and the breakdown. Same as over here. And then you can see recently we got the throwback, right? If we look here, we got our throwback and broke above that breakdown level. And then we've started a really dramatic move to the downside, which is exactly what happens after the throwback phase. So if that's possible, that this Wyckoff method is going to play out, that's one scenario that could take us into the correction phase and possibly down into redistribution to fill those gaps down on the XLF chart. As you can see, we pretty much got this part of the chart lining up with the Wyckoff method, and it seems that we could be starting the correction phase. And if we break down through correction, that'll take us into redistribution, which would take us into these gap fill areas. So I just wanted to kind of, present that to you guys real quick. Now, in other terms of the stock market, what we have here is QQQ on the left, which is the NASDAQ, and then we have IWM on the right, which is the Russell 2000. And we can see that both are attempting some breakouts here, or rather a breakout and a breakdown. QQQ is really testing this 310, 311 area right here. And you can see we've tested it multiple times. And the more times you test an area, the stronger the chance of a breakout, right? So we could be looking for a three-wave bullish structure up here to possibly take QQQ up to the 330 region. Now, something we need to be cautious of, though, is we have bearish divergence on the MACD as well as on the RSI, where we're making lower highs. Meanwhile, the price has actually been going slightly up, if not remaining flat. Now we're seeing the exact opposite here on IWM, where IWM is trying to break down below this 170 key level right here. And we're actually building a bullish divergence, creating lows and higher lows. Meanwhile, the price of the stock has actually been going down. So it's going to be interesting to see, do the divergences play out, or do we get a breakout to the upside and possibly a breakdown to the downside on the Russell 2000? So this is definitely something that I'm going to be paying attention to next week. Now, when it comes to investing, based on, kind of like economic growth versus inflation, there's about 4 stages, right? So you have the ice age, you have the disinflationary boom, you have running hot, you have stagflation, okay? And so economic growth is going to be going from cold to hot here on the right, okay, on our x-axis, and then the y-axis is going to be hot to cold, and this is inflation going up. And so what we see here is the ice age is a period of weak economic growth with low inflation. And typically, again, not financial advice, just kind of going over some information. Typically, what people would be looking for is investing into pharma, biotech, and life sciences, food and staples, retailing, telecommunication services, commercial and professional services. That's in the ice age with weak economic growth and low inflation. Now, in stagflation, where you have weak economic growth and high inflation, typically people would be looking at things like food, beverage, and tobacco, utilities, household and personal products, healthcare equipment and services, and consumer services. In a disinflationary boom, which is strong economic growth and low inflation, you'd be focused on media and entertainment. You'd be focused on softwares and services, semiconductors and semiconductor equipment, technology, hardware, equipment, retailing, autos and components. And then running hot, which is when you have strong economic growth and high inflation, you're going to be focused on basic materials, capital goods, energy, durables and apparel, banks, transportation, dividend financials, real estate, insurance. All right. Now, if you didn't know, the U.S. has actually made some strikes against Syria here recently. I also have a whole dedicated video to this, but we're going to briefly cover it. But that's basically the headline, right? U.S. and militias linked to Iran trade airstrikes in Syria. And there's some more news here that we can go into, but I've already made a whole dedicated video. I just want to put on your radar a few stocks to pay attention to. We have RTX, which is Raytheon Technologies, and we also have LMT, which is Lockheed Martin. Now, Raytheon Technologies has this bull flag here forming, and you can see we have these two trend lines here. And so it's going to be really interesting to see if we potentially get a breakout to the upside and these missile launches kind of spark interest towards some of these war related stocks, which that's what these are. These are generally war related stocks. And we could see a breakout to the upside on RTX if we break out past this pattern. If we break above 104, we could come up to 107.5 as well as 111.38. Now you need to be pretty cautious if you're going to try to play any of these, because we've tested this lower trend line here so many times, right? Look, on RTX, we tested it 1, 2, 3, 4, 5 times. The more times you test the trend line, the weaker it gets. And so there is a good likelihood that if this missile news and this war related news doesn't really play out in the stocks, that they could see a strong breakdown. So I think it's a really good trading opportunity to the upside or to the downside, just to pay close attention to these, as they do have some nice setups. Now, Lockheed Martin has a couple of patterns forming. You could say we have a little bit of an inverse head and shoulders here, with the left shoulder, a head, and a right shoulder forming. So it'll be interesting to see, and this would kind of be our neckline here. Or you could say we have a triangle pattern, and very similar to RTX, it's tested the trend line about 4 or 5 times, as indicated over here. And the more times you test those trend lines, the weaker they get. So we could see a breakdown on LMT, Lockheed Martin. If we essentially break below that 460 area, we could see this thing drop all the way down to 430. But if we get a breakout and we're able to break out above 500, essentially, we could see this thing run up to 524 or possibly even 548. And then another one, the last one, is going to be DFEN, which is basically the leveraged defensive and aerospace bullish ETF. And so we have some of the major supply zones and demand zones here. This is another one that I'm going to be paying attention to, putting in a little bit of a triple bottom here, right? With one bottom here, another bottom here, and potentially a third bottom here. Now, if we break this line in the sand right around $18, and most likely we're going to see a pretty strong move to the downside and at least test the $17 previous demand zone. But otherwise, we do have this expanding top right here that gives this thing a little bit more room to the upside to rally if it really wants to. If we see a strong push in some of these war related stocks and this aerospace and defense bullish ETF, we could come up to our 22 to 23 or even $24 are going to be ultimately some of the bullish price targets and overhead supply zones. These supply zones are areas of liquidity where typically you see the large moves, right? And so you can see that here, even the stock has been really just gravitating towards this $18 region, because this is an area of liquidity where prices pushed up, right? We push down, we pull back, and then market makers grab liquidity and push it up higher. And now we make a higher high. And then it comes back down into this area of liquidity again and again, and then it pushes back up higher. And here we're back in this area of liquidity right now. And so if market makers do want to push it up higher, we could see it come back up to this area here, which is sell side liquidity in between $22 and $23, or this 24 to 24.5 region, which was also previously sell side liquidity. So these are just a few of the plays that I'm looking at this week. Right here, we have BOTZ, which is basically the robotics and artificial intelligence ETF. AI has been taking the world by storm ever since ChatGPT has came out. And, a lot of these AI related stocks have been very bullish. And so if this bullishness wants to continue, we could actually be seeing a 5-wave structure taking this thing up to the $27 region, with our wave 1, 2, 3, 4, 5 playing out like so. We also have a little bit of a bull flag forming here. So, there's a few different setups across the market. Now, of course, if we break this long-term trend line here that we've tested about 3 times, then there is a strong likelihood we're going to come back down and retest some of our previous lows, even to $20, maybe around $22. But, we could continue to see the bullishness play out in this, and that could again take us up to the 27 region, and there's even a daily gap up to fill around that $28 region. So this is definitely something that I'm watching for. Now, when it comes to the monthly time frame, you can see that we actually had this bearish channel right here, and this is pretty much the entire year of 2022. This ETF is trading pretty much just down, and we actually got a breakout retest of this trend line, and we're pushing up higher. Now we have our major Fibonacci retracement levels here, the 61.8, the 50%, and the 38.2. These are the three most common and well-respected retracement levels from our swing high to our swing low. And so if we were to just get a 38.2% retracement, that would take BOTZ up to about $25.94. A 50% retracement would take it up to $28.63, and the 61.8% retracement would take it up to $31.32. Now, something to be cautious of if we do end up getting these retracements and hitting these retracement levels, but we aren't able to break out higher, is this is going to put in a monthly time frame head and shoulders, right? We have the left shoulder, we have the head, and our Fibonacci retracement levels are going to be the areas where we could potentially put in that right shoulder. And, this could just be a temporary rally to ultimately have another big move to the downside. Now, we also had bullish divergence building here since the summer of 2022, where we're making these lower lows on the price, but the RSI has been making higher lows. And the MACD is actually very close to curling to the upside right here on the monthly time frame. So it's going to be really interesting to see when it comes to the MACD and the RSI. Do we break this bullish divergence trend line? That could be a bearish indicator, or do we end up getting a MACD crossover on the monthly time frame? And could that be a bullish indicator? Now, NVDA is the number one holding, the biggest holding in the BOTZ ETF. And NVIDIA also unveiled some more AI related news, and the stock has pushed up over 150%, essentially since its lows here in October. And we actually just hit my wave 5 bullish price targets on NVIDIA, which were 256 and approaching 278. So if NVIDIA wants to continue being bullish, we could head up to about 278. Potentially even 305. Well, now it's pretty, it's this thing has run up so much, and I really wouldn't be surprised for a pullback. It's just been trading so bullish. It's tough to go short on these things when they're trading so bullish. If we take a look, we have this channel here as well, and it's just been trading perfectly in this channel, really just moving up higher. And so even if we do see a pullback, we may just see a pullback to bounce off of this channel and continue going back up. Now, if we break this channel right here, we do have this very big gap down on NVIDIA to about the $205, $210 region that we initially gapped up on earnings, and we haven't really seen that gap fill since then. So if we do break this bullish channel right here, I would be looking potentially for the gap fill down on NVIDIA and seeing if that ends up happening. But for now, NVIDIA has been super, super bullish. It's been like one of the most bullish charts I've seen throughout 2023, pretty much just straight up nonstop. And if you take a look at BOTZ, the monthly chart and the daily time frame, remember that NVIDIA is the top holding in this ETF. And so maybe that's why this stock has also been performing so well, as you can see, really bottoming out here in October and having a tremendous rally since then. So that's going to wrap up today's video. Actually, I got one more slide, and this is another way that gap fill could happen, right? So I mentioned this gap down. If we break this bullish channel right here, something that we have forming is known as the bump and run pattern, indicated by our prevailing uptrend, and then we have the bump right here, and the run would be this big move to the downside. And so this is what the bump and run pattern looks like. If you Google it, okay, you have your initial prevailing uptrend, then you have that bump. And then once you get that trend line break, right? And so if we, maybe we continue heading higher, but if we end up breaking this trend line here, that's going to be something that I'm watching. And that's what could take us back down for a pretty dramatic move to the downside on NVIDIA. So you definitely want to be cautious. This thing has ran up, as I showed you guys, over 150% in a very short amount of time. So buying at these really elevated levels is very risky. And so you want to be mindful of the risk before you buy into anything. Now, make sure to smash that like button, subscribe to the channel if you guys are new. Hopefully you enjoyed this video. I threw in a lot in this video. We went over a bunch of stuff. And if you find it useful, and you want to learn more, or you want to get some of my real-time market updates, and see what plays I'm getting in and out of, you guys can join the Discord. The link to join the Discord is in the description below. If you use the code Zackley, like the channel name Zackley Trades, you can get a discount on your membership. Hope to see you guys there. If you do join, shoot me a DM, send me a friend request, let me know who you are, and I'll try to help you guys out and navigate you as a beginner in the Discord.